So do you have any specific markets you want to talk about as we do this?
Well, probably the two I'm most excited about at the moment, one would be the cotton market. And if you go back over the last 15 years and look at cotton trades, in 14 of the last 15 years, cotton, when purchased on November 25th, has rallied into January the 3rd in 14 of the last 15 years. And it looks good right now on the chart to be able to make a move like that.
Yep.
Have you got a cotton chart there?
I don't, but I'll put one up on the screen when we do it, so you can go just
Okay.
go ahead and talk about it.
Okay. Let me get my cotton chart up. Typically, it's the March contract that we're talking about, and it has made a swing low, and the volume's really picked up on it. So this would be a good seasonal trade to get into because not only because of the track record of the seasonals, but also because the technicals, you like to buy it at cycle lows. And the last time cotton was at a low like we're at now, it was back in August. So you could take a position if you could get into a position next week. You could get a stop set and you wouldn't be risking that much money. So
Gotcha.
It's a good place to enter.
Now, are there any options on cotton, or is it just outright?
Yeah, you can trade options with the cotton if you want to. I always prefer just trading futures. I'm a futures guy, but yeah, for people that don't like margin calls, you could step in. This would be these longer term cycles are where you really want to trade options, in my opinion. If you're going to do options, so your best bet to be able to have a trade that works out is going to be on the longer term cycles. The shorter term cycles, the options become a lot more tricky. You can't place stops on them really. They're more or less all or nothing bets. And so this would be one of those times you'd want to consider maybe an option.
Gotcha. So, all right. And then how about have you been watching? So this week I saw coffee take off, cocoa take off. Have you been watching any of those particular soft markets?
Yeah, I got into one today. Orange juice.
Orange juice, okay.
Okay, and orange juice, we're kind of in the tail end of the seasonals for orange juice, but it's not really. It's really been grinding sideways for months.
Mm-hmm.
But if you can look at a yearly chart, it looked like to me that it was on the verge of breaking out of this long consolidation, and it looked like that happened yesterday. And I put in an offer to buy yesterday at $500, and it got hit this morning.
Gotcha.
And it's closing up on the day. One thing about orange juice, you can't trade options with it. It's just too thinly traded.
Yep.
And really, if you're going to trade it, you really can't use stops on it.
Gotcha.
So I've not had a lot of luck with orange juice.
Is that because the volatility is so high, it just kind of runs those stops where even if you place one, you're just going to be chased out of the market?
Yeah. It's one of those, it's up there with palladium in my view, where you really can't use stops if you're going to trade it.
Gotcha. So, and how about cocoa? Have you been, well, I know you were looking at cocoa a couple weeks ago.
Yeah.
Surprised to not see you in there now. Have you taken a look at that one today?
Yeah, it looks like to me that it's breaking out of a bull flag type of pattern. And if you also looked at it, it broke above the high that it made back in September on this move. And I expect we could see a move on cocoa, probably another 1,000 points on cocoa pretty easily.
So what's your overall take with all these commodity prices starting to tick up higher? Is you thinking some inflationary concerns? Is it supply and demand issues? Is it geopolitical front? What's your take on kind of where we're at with the new presidency and kind of going forward with the interest rate? Right now predictions, I believe we're leaning towards a reduction. Is that contributing factor to why these commodity prices are starting to pick up some steam?
I think so. All of the above. So the short answer to your question is yes, on all the above. We've got a lot of things that could create some difficulties in the supply chains.
Yep.
The one area that's probably the most bearish right now would be the grains,
Mm-hmm.
and the grains are going to be real difficult because first of all, the United States and South America are facing large supplies.
Yep.
And also, for some reason, China doesn't want to deal with this too much. So,
Yep. Shocker.
Yeah, shocker. So they've got South America. They can supply. South America's happy to supply China's needs and be appreciative of China as a customer. And so Donald Trump's got a lot of work to do with China to get them back buying American commodities.
Now, what are your thoughts on the tariffs? He's saying 10 to 20%, but specifically pointing out China. He's saying using 60% on just China, but 10 to 20% across all the other countries. Do you think that's a contributing factor to why China just doesn't want to deal with us in the corn front, and that's kind of hurting our situation with the grain sector?
Yeah, if you look during Trump's first presidency, he came out with his tariffs, and of course China retaliated back, and the United States doesn't export much except for agriculture. Our agricultural products is our largest export item, and China was our biggest customer, and so we put tariffs on China goods, and then China retaliated against American goods, and so there for a year, the farmers were getting a lot of we're getting for everything. It really hurt the farmers.
Yeah.
By the time Trump's presidency was over, we had a strong surge in exports to China. And this continued into the first part of the Biden administration. And then Biden rolled back a lot of the trade deals that Trump had done. And here we are again, where China doesn't want to buy American products. So hopefully Donald Trump can get a longer term trade agreement made with China that'll be helpful to farmers and for agriculture.
Now, wasn't in Trump's first presidency, didn't he kind of force China to buy a lot of our grain that propped it up? So wouldn't you expect in Q1 or Q2 of next year for kind of Trump to kind of repeat that, like basically buy our grain, or, we're going to do other things to kind of mess with you? Could you give some input on that possibility?
Yes, you're exactly right. It wasn't an immediate thing, because China retaliated. They didn't want to change what they were doing. And then, but they, in order to deal with the United States with the tariffs that we put on them, they were forced to start buying American grain.
Yep.
And so, in the longer term, it worked out really well for American farmers. And by 2020, agriculture had in the United States, we had some of the highest grain prices that we'd ever had. And you fast forward to today, and farmers are in the midst of a terrible recession right now. In fact, John Deere sales are off 45% right now.
Wow.
And that's
45%.
That's pretty much the confirmation you need that things on the farm right now are not very good, and farmers aren't spending any money. They're hunkering down and hoping they can ride this out.
Yep. Interesting. So are there any other markets that you want to speak about? Then I'll switch over to me.
No,
okay.
I have at it. I'm interested to hear what you've got.
All right. Well, let me go ahead and start off here. I'm just going to start off with the Obviously I'm a big gold bug. Steve is a big grains guy. He's out there in Kentucky. So he's talking to those farmers every day. Meanwhile, I got my start in the precious metal sector at one of the nation's largest bullion dealers and came into the future side. So let's talk about gold this week. Kind of interesting. And silver is being held down while gold is kind of breaking out a little bit. We had what was it? A low of 25.41 and a half, then a high of 27.1250. Really, the geopolitical front has been front and center with the war situation with Putin. So it'd be interesting to see what happens going forward. I expect more volatility, but I will say this: if by January 20th and Trump gets once he gets in, I would expect the war drums to basically silent a little bit more, and gold, silver could come off from there. But realize this: under Trump's first presidency, he did still spend a tremendous amount, and gold went up by 52% in his first presidency. But there's a lot of talk about him cutting the government with the Doji, which is, I think, the Department of Government Efficiency, and effectively cutting the government jobs, which could bolster the U.S. dollar. But it will be interesting. I think Trump is stuck in a bit of a conundrum as well, because if you talk to people on the street, we are already kind of in a recession versus what the stock market is telling you with a weak labor market. But right now, I'm still bullish the metal going into year end. Like I said, we came off that low 25.41 and a half. Silver, meanwhile, is just been stuck. Let me take a look at here. Silver is on a daily, actually a little bit bearish. It's stuck at kind of a critical spot. I think it's going to break some technicals and pop next week is kind of what I'm thinking. I know, Steve, you had some clients get long silver, or looking to get long silver for that matter. But I think silver will probably break those technicals and pop next week. What's interesting is the U.S. dollar is at 2-year highs right now, and the precious metal sector is showing significant resilience against that higher U.S. dollar as well. So that's my take on the metals. I'm still bullish, but I'm really managing my risk right now. I'm not leveraging myself up too much. Just kind of keeping some smaller positions and just kind of navigating, because we have had a pretty decent run in the metals overall for the last year or so. So that's my take on the precious metals. And in the interest rate front right now, it is leaning just slightly towards a drop. My thinking is probably going to hold, but it just went to 52 on the CME Fed watch tool. I think it just went over to 52. Let me take a look here. It went to 52.7% lean towards a drop with a hold of 47.3%. So all eyes will be on that in about 29 days when the Feds meet. But keep an eye on that because that will kind of dictate where we go from there in those bonds prices. But that's my take on the precious metals front. I hope that makes sense, Steve. Did that make sense to you?
You're speaking my language, Drew.
Yeah, I just
makes sense to me.
Yeah,
I've got a question for you. I know
Sure.
you're not a Bitcoin guy, and I'm not either, really. But
Yep.
Bitcoin's been on a tear. I think it's hard to ignore what Bitcoin has been doing. Has that? And of course, now gold's just taken off like a rocket again as well.
Yep.
I'm wondering how much. Is there any competition between Bitcoin and gold, or are those both considered safe assets, or do you see any correlation there?
2 days ago, I would have told you Bitcoin's stealing the show from gold. That was just 2 days ago. And then to see gold kind of come back in, and I'm reading a lot of reports, central banks are buying, record amounts, and they're loading up. And, Bitcoin is an interesting new concept, and there's a lot of kind of unknowns about it. I've heard some rumors Tether is tied to it. They're buying treasuries to prop it up. So Bitcoin to me is a little bit of a more speculative arena versus precious metals in that context. That's just my own opinion. I've got clients that trade it. I know you do. I know you and I aren't, we don't love that product because the margins are so high and it kind of ties up things on us. But in saying that, it's a little bit more speculative. I would use caution. And when you see the internet, blowing up and all these young kids jumping for joy, that's kind of a red flag to me. And I would just use caution.
Right. That usually means that people are getting ready to be left holding the bag.
Exactly.
I think so.
When you got that much volatility, when it can go from 100,000 back down to 25,000 in the drop of a hat, as it's done, percentage wise, those moves. In just my professional opinion, I know retail loves volatility, but generally speaking, they don't usually trade. Like you said, if they get stuck holding the bag and they get pushed in the corner. So on a professional level, I kind of back away from that. The psychology of that market, So what's your thoughts on it so far?
Well, we're at a psychological level right now, I think, with Bitcoin at 100,000, and I think it'll probably go higher than that.
Yep.
It could certainly take a pause here, though, for a little while and consolidate and get a little more energy built up before it can push higher. But I think that people are nervous. I think that's the reason that we're seeing Bitcoin and gold performing as well as we have, not just because of the war, but also there's so much concern about the government spending around the world that's just out of control.
Yep.
And that's never ended very well. So
yeah, I have to agree. We're kind of coming to a head on the spending factor, and that's where like the Doge, you can see why Trump was voted in and the Doji, and people are just fed up with money just flowing everywhere else but here.
Right.
So, well, good stuff. Well, Steve, this is our first episode, by the way, everyone. Hopefully, we're going to be doing more of these. I appreciate Steve coming on board, and like I said, it's our very first one. Just want to give you some insights of what it's like as a traditional broker who's actually trading money and watching our clients, and just give you guys insights of what we're looking at. Hopefully, it helps you out. If you have any questions, reach out to Steve. He runs his Wade's Trades advisory service where you can go ahead and get some hand-picked trades, and I would highly recommend following that, or you can go over to progoldtrader.com, which is kind of my side for the precious metals guys, and I'll help you out with that. But other than that, hope you guys have a great trading day. Till next time, take care.